following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi, everyone. Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday, every market day at 11 o'clock until noon Eastern Time, 877-927-6648. Yes, and thank you, Steve, for 2 great hours. Oh, we have fabulous programming here at TFNN. And don't forget, today being Wednesday, you got Larry Pesavento coming up straight after me, and we got a full house thereafter. So let's do something that I want to look at, and I needed to see the E-minis go to leg D in the 120-minute chart. The high was 1874.75 right up until just a few minutes ago. Now we've got that leg D with the stochastic at 89%. That's very strong. And the MACD just turning down. In other words, we've had a little divergence here with the price going higher and the MACD saying, well, wait a minute, I better hold here. That green line. I love teaching about this MACD for my subscribers. I always discuss how these things are working. And what's really important is you want that green line to be above the red line because the green line is the faster moving average. And it is right now. But it is so close, making that little dolphin move right there. And most importantly is the daily chart is extended leg D. Now, let me go through this because it's such an important session. For my subscribers, normally what we would do in leg D, E, or F in the Dow is we would grab the opposite. We would grab either most of the time we don't do the DOG, which is 100% short. We go 200% short only because of the makeup of this particular instrument with the 200 and the 300% positions, either long or short, but especially on the short side, unless you have all 30 of the Dow stocks moving higher, closing higher, moving higher, the chances are that it will not give you as great a performance as you would think, and it is closer not to the 1% or the 200%. It's kind of right in the middle, maybe a little less than 200, like 175%. Oh, maybe sometimes not even that, 150%. So that's the way I look at it. But we have not done anything, and we won't do anything until a certain parameter is hit on one of the indexes. And so far, it's just missed. And I want to stay in the long position as long as possible. That's one of the benefits of learning how to use the fast-moving average of the MACD and the slow stochastic in the percentage area. So what I'm looking at here, let me go to the front page. This is what I give my subscribers every single day with a huge report. There's a report here on the chart of the Dow. There's a report usually underneath it, which is more updated and maybe a little more comprehensive, or it might have some stuff that I haven't got in there that is now updated from the day before where I'd already done it after the close. So it's a very comprehensive report. And what it said was, today I'm expecting a doji candle, a small, narrow trading range candle. And I then outlined for my subscribers the kind of action we would be taking and what we'd be looking at for the next day, which would be Friday, if certain parameters are hit, if I'm correct about the small candle, the doji candle. Now, here's another thing that's quite important. Almost every other time when the Dow's gone to a peak E, it might have gone on to an F, but that is also the period where you've got to assess very carefully to say, are the criteria here that often make an instant restart, and would it be likely that there's an instant restart? And why on earth are you hesitating when you've got now? I'm going to get into the nitty-gritty. First, let me say the Dow is down 10, 16,385. The S&P is up 2 at 1876. The composite index is up 7 at 43.59. You've got gold up 60 cents. You know, gold is holding really, really well. I suspect that the weekly chart will continue higher, even if there is a 30-point or so decline over the coming week or so. More importantly, silver's also doing the same. It's up 0.04 at 21.26. You've got platinum up 21 at 14.85. I've not looked at platinum for a while. If you don't mind, I'm just going to grab the platinum chart here at PL. And there you go. At PL is, whoa! Excuse me. Sorry if I shocked anyone. I did not expect that. Platinum broke out. And that is really exciting because this is starting to say to me that you've got some of the industrial sector, that side of it, that is starting to move very, very well. And one of the reasons why I did not want to go full bore, even though now I'm going to finish what I was saying before, you've got bonds up 5 seconds at 134 and 3 techs. Crude oil down 1 at 102. You've got high-grade copper at 3.25. You've got the dollar down a fraction. Now, this is very important. You remember what was absolutely essential, the prerequisite of the Chapman wave methodology is to find the lowest, most identifiable low bar. And the S&P was on the 5th of February at 1737. And what do? You merely count each successively higher peak and label them uppercase going up and lowercase going down. And what do we have? We are in leg D. And I said that I suspect that the Dow will get to an E as the S&P gets to a D. And that's exactly what we've got. I also said we're watching the Qs because they need to make a leg D. And lo and behold, they've broken yesterday's high and they've extended. You cannot get a peak today. It has to be tomorrow if there's a lower high bar. And this is very good action. Now, when you are getting to your peaks, D, E's, and maybe F's in the major indexes, that's where you want to assess where are the technicals. Are the technicals starting to deteriorate? And what we've actually seen, especially if you look at the IWM is the Russell 2000 ETF, iShares, that made a leg E, a powerful leg E. But if there's no new high bar today, it's a peak E. Now, could it recycle? Well, in the Chapman wave methodology, it's a particular technique that took me years. Really, when I say years, I do mean years to uncover it and then to investigate it. And then, and this is very important, not only did I have to do that, but I needed to assess over a long period of time why did we often get to a peak C, pull back, and eventually get to that requisite D. So the instant restart, I'm only mentioning it here. I'm not going to go into it in detail other than to say it is potentially active, but we need a lot more evidence to say that it's going to the price is going to recycle to a whole new buy signal, to buy mode from here, say in the IWM or and IA is in fact the very broad New York Stock Exchange. And at this particular point, you've got the MACD still very strong, the stochastic at 84% in the daily, broken out in the weekly. It's got an F/A. Is this a brand new A? I don't want to get into that right now. I just want to say that at this particular time, all the factors that I look at that tell me that we are about to either turn down or recycle higher are just fitting into place beautifully. I don't have the signal yet to say that we're going down, not even in the 120-minute chart, because that's where you'd find the evidence. Even the 120-minute chart of the New York Stock Exchange is holding beautifully right here. And when I'm looking at this, I'm saying to myself, okay, don't jump to conclusions. Let the weight of evidence be your guide. And in this particular instance, the weight of evidence is such that the volatility index is still down under 14 at 18.99 area, under the 9-period moving average. And there really isn't, even though the economic news today wasn't great, there's no real bad news that's pushing the volatility index much higher. So I've got a cautionary note, and it says there are factors that I'm looking at here. There are technical indicators that I'm using. I have not pulled any trigger yet on the index side, major indexes, to do anything. It was almost close this morning, but it hasn't been triggered. So I'm going to do this now. Got the volatility index. I want to just quickly cover the IYT, which is the transportation index. Look how it's doing here. It had a horrible week back in late January. And then all of a sudden, you've got leg E unfolding right here. You've got a retracement towards the 135.93, the IYT. This is the iShares of the Dow Jones Transportation Average Fund. And I'm saying to myself, you know what? Keep everything in mind. Normally, this is where you'd be jumping on the bandwagon to the short side. Prepare slowly. Get involved in the short side slowly. But be prepared. Because if you have a GE, even though it is really responsible for the big push from the 25 area to 25.76 where it is now, it's not a great action, especially if Immel's buying millions, tens of millions of shares, and it hasn't done much. That he's the CEO of GE. Now, if General Motors is doing so well here at 37.85, up 92 cents, up 2.50, I have to say to myself, that is something you've got to keep in mind. Ford is doing quite nice. It's not great, but it's definitely bouncing off the lows, and it's in A, B. This is leg C. Oops. Let me just one second while I double check. Don't like jumping the gun. 93, 93. Yes. This is, in fact, peak A, peak B, peak C, and it has to get an arrow because it's gone to a C and it's testing the 200-period moving average. It should go to a D, but it's not great action yet in Ford. So I'm trying to put the whole thing together, and what I'm saying is I have certain trigger points that should be triggered to start the short side. I have certain points that I'm looking at that say, if such and such happens, be very careful on the short side, because there are just enough stocks that are doing very nicely here, and they're pretty important stocks, that there could be what I call a rotational correction, that you could be right on the indexes, but you could also be right going the other way, which in this case would be up on the long side, in certain stocks that are doing very well. So I'm saying that this is a very important moment in the sense that if you have stocks that have held very well in the month of February and are not pulling back on like on Monday, did not pull back dramatically or just pull back a little bit, then what I would say to you is keep in mind that all you need to do is raise your stop and let the stock tell you what's next. In the indices, if we break, I said to Tom when I was interviewed yesterday, if the Dow breaks and closes down triple digit into Friday, that would be a very negative on the short-term side and say, hey, be very careful. We've got all our requisite Ds and Es, and we could have a pullback. I don't know yet it's of substance because you'd need to see the TLT move to the 110 area. Right now, the 109s is very strong resistance. It's at 107.64. It wasn't able to pierce 109.18 yesterday. So we'll watch it. I'll be right back. Basil Chapman, Tiger Technicians Hour, Downtown 24.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're new to TFNN, then you've probably heard some of our hosts and traders talk about the exciting charting program, The Art of Timing the Trade Charts. Tuesday, March 11th at 6:30 p.m., Dave White and Tom O'Brien will be hosting a live study session for anyone with a subscription to this exciting charting program. During this hour-long online workshop, Dave and Tom will lead a brief presentation along with taking questions from those that attend. Right now, we have a great deal for all new subscribers. You can sign up for the Art of Timing the Trade Charts and get your first entire month for only $1 while gaining access to this live event with Tom O'Brien and Dave White. For more information on how this exciting charting program works, you can click on the Charts button on the front page of TFNN.com today and check out some of the videos that walk you through a variety of the features included. Sign up now by taking advantage of this exciting offer for just $1 before it's too late. Visit TFNN.com today.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back. Basil Chapman. Dow's down 23. S&P's up 1. And I've been wanting for a couple of days now to talk about Bill Bryson's book, One Summer, America, 1927. I've spoken about it before, but there's a chapter that was absolutely a shock to me. I did not realize it. He makes the claim that there were four bankers, he called them bankers, that were instrumental in essentially precipitating the action that led to the crash of 1929. I wanted to talk about them, but I'm going to leave it. I'll do it next week. I want to review it again. I don't want to just do it off the top of my head. I want to go through it, and I want to go through. I know some of the names very well from other periods, other times that I've studied the 1920s in great detail. In fact, I went through every single New York Times and Wall Street, was it Wall Street Journal? Well, it was a New York Times article on from the 1920s. I went through the microfishes. And as I recall it, the Wall Street Journal, am I correct here? Did the Wall Street Journal go back to 1920s? I'm just forgetting. I've got, in fact, I think I might even have one of the big microfishes folded up over here. There was the author of the daily column in, gosh, I thought it was the Wall Street Journal, but I better not say it's the Wall Street Journal. It might have been the New York Times. Was one of the few commentators I observed in all that period who actually started to talk about the going to the highs in 1929 as a potential. Gosh, I must find it because the terminology they used was so quaint. I mean, we look back now, but he was really perceptive He did not glamorize. He was just factual, and he gave an interpretation. And as I was reading it each time, I thought, very perceptive, very perceptive. I'll try to cover that over the next week or two, but I'd like to go through it talks about John Jacob Raskob, who was at the time national chairman of the Democratic Party, but he also had something to do with GM afterwards. So I need to go through that, and I'll go through it in detail, but it's very interesting. Now, I have a chart here. I was asked a question about what do I expect the Dow Diamonds DIA to go to in this move. I'm just saying that this high, there was a 164 round number high at one point yesterday, but it wasn't a print. It was a print, 164 round number high. 164 round number high. Isn't that fascinating? So all I can say is that if 164 is taken out, it was 163.88. 98. Well, if I'm looking at this and I'm correct, then if the Dow takes out 164, that'll start C to the upside in the 120-minute chart. I don't think we're going much more than 164.20s. But in the meantime, back at the range, this is a very, very, to me, this one today and tomorrow are probably the two most important days that I've come across in the Chapman wave methodology for a long time. So parameters for me are going to be very clear. The diamonds did not make a new high above 164 round number. The Dow so far today has not made a new high. So far it's a peak E unless we make a new high above 16,419.49. And the S&P did make a new high, and all it does is extends leg D. But if there's a doji candle here, the parameters are going to be very clear. I'll be watching them very closely. So now let me a couple of things that I was kind of interrupted, myself interrupted, in terms of the market itself. The IYC, you know, I always bring this up. For years I've been bringing up the IYC, and I was saying, look. But now I'm looking at it and I'm saying, made a new high, all-time high today. The iShares Dow Jones U.S. Consumer Cyclical area walked the 9-period moving average since it broke above in October of 2011. Look at this. We've got A, B, C, D, and we're in leg E. Now, this is a monthly chart, and that's the reason why I'm saying I want to be as careful as I can be right here. There are so many overextended chart patterns that are formed, but even with a chart like this at the IYC, look, it's in an up channel. Every time it gets to the top of the up channel or close to it, it has a pullback to re-energize, to break out new recovery highs, which this has done. So when I'm looking at the IYC, I say to myself, okay, new high today, new all-time high, but it's in leg D in the daily. The MACD is looking very good. Stochastic is not confirming the rally. I need to go through every single look at the XLF. Bank of America suddenly spikes up huge today. But this is leg E in the XLF, and I hear the music. I think I will. I'll talk a little bit about the instant restart. I'm going to circle this right here. Why? Because we need to know the possibilities for going higher. We need to know the possibilities for going lower. And I'll be right back straight after this message.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
I had a question, a little email question there. Asking, hey, why are you talking about the crash now? The crash of 29, that is. No, this is just historic. It's just that I happen to have this book open recently at this page, and this is the page where it discusses these four who evidently, according to Bill Bryson, were absolutely instrumental. They had planned the crash. This is what he says. So I want to go into that, just as it's a matter of interest. Then I was asked a question about the VIX, if I could go through the VIX again. Yeah, look, the VIX, please forgive me. I'm going to jump around a little bit. The VIX is at 1415 right now. That's very low. But the stochastic has been rising, and the MACD has been rising. So it says we're right. That's what I'm saying. We're right on the cusp of bad news and the VIX going higher if there is going to be a market turn down, or it remains in the 14s or even goes lower towards that 1344 most recent low, 1182, 1169, I think, with the other lows going to January. But what I'm looking at is that there's a situation arising here where the weekly chart says, I'm having a tough time rallying. And that's why I said I wanted to look at the stocks that are actually acting quite well. I mean, we have in my opening call, we have a couple of stocks that have done very nicely, but the ones that we just got a couple of days ago, one in particular, I'm looking at it, it's up real nicely. Even today, it's up 0.58%. I mean, I like that. And I'm trying to separate the wheat from the chaff, whatever the expression is. Now, So that's the volatility index. I also want to show you a chart here. I hope I can bring it up. Oh boy, is this correct? Is it this? There it is. There you are. This is from the Boston Globe this morning. A mostly ignored stock market is roared back by Shirley Lung. And I've read her periodically. She does business and some things that she knows about, she does really well. The stuff that she's really not too sure about, it's okay, except that this is very interesting. How do I know if the stock market is in a bubble? When Mom starts giving me stock tips, and she hasn't. Not one in this 5-year bull run we're in. Actually, 6 years. Compare that with the late 90s, when it seemed like she was calling every week to drop a get-rich-quick tip. It would make me want to ditch my day job for day trading. So anyway, she goes on about this stuff, with the Dow skidded to 6,500s, etc. But most importantly, she talks about, it isn't here. I'll find the actual newspaper. I want to talk about what the statistics that she gives. And I have to tell you something. It is shocking. It is absolutely shocking. This is the most hated bull market mega bull market that I've ever come across. So I will do that during the break. I'll zip and get that Boston Globe front page because it is fascinating for those statistics. I mean, how many people think it's a bad idea to invest? We're up in the 46% area or more. Wow. All right. Let's get back to the nitty-gritties. I want to go through a couple of things. GE is an important stock at an important level. Why is it an important stock? Let's just say as a psychological Dow it's one of the longest lived Dow stocks. DuPont is actually, I think, the longest. So GE really has a history. And look at this trend line, this channel line that it just broke. It went to 2432 back in February the 7th, weekly chart. Spikes, it goes to an A. I call it a gray A because it's way underneath the previous high. And look, it's got two candles from last week and this week that are very strong candles trying to make that a base of support. What I'm not happy with at all, I like the V shape. I'm gonna do something on the I'm going to do something with MACD and stochastic because I think there is so much information in these two technical tools that I'd like to impart that information. I've done it before, but I've added to my knowledge, and I'd like to impart that at some point. Look, that stochastic is curving down. You want the green line to be zooming up, but at 27.53, it's okay, but it's really not good. You want to see GE surpass 26.04 for leg B. It's got to do that without breaking the 25 support. It's also got to do it with the stochastic turning up nicely, like that one, like that one, like that one. Even there, you got a decent bounce and then a pullback. I don't like this kind of stochastic move right now, but the price is moving high, and that's good. But you can see how important you close underneath, or GE closes underneath 24.92, the low of this week, and that's going to be bad. That's that H pattern, and then it's under really important, that red line, that's really important support. So that's that. Now, let's look at the weekly chart. The daily chart, as I said before, it's just a chart. It's not bad. It's not a great-looking chart. And the monthly chart had such a bad January that I'm looking at it and I'm saying, whoa, you want to see a move right into at least the middle of that bar, somewhere around 2034, sometime this month, the month of, what are we in? March. Okay? And if that's the case, you'll say, oh, okay, saved by the bell, because you were really, GE, on the cusp of the 9-period moving average, closing below it. You're on the cusp of the weekly up channel support, and then the daily gave you 24.32 times 2 low, double bottom low, and that should be good for a break above 26.04. In fact, it should be good for a trampoline bounce to the 2650s. So I'm watching GE really closely. Now let's do something else. Yesterday I did my four horsemen, but I'd like to do something else in terms of what I'm looking at. If you go to Tesla, Tesla is holding really well after a spectacular move. And I'm suspicious of, no, I shouldn't say suspicious. I'd be wary of just deciding because it looks overbought that it's going to go tumbling down from the 254.59 level it's at right now to underneath 200, the 9-period moving average of 241.74 to really break down and go to the 230s. Not yet. Why? Because it's holding very well. The MACD fast-moving average is good. Stochastic has pulled back, but it's still at 81%. The weekly chart is flattening out in the stochastic at 92%, and the MACD is good. And the monthly chart is at a spectacular move. I don't want to talk about that because as an IPO, when you get to all-time highs like this with everything looking good, you really need the rudder of the daily and then the weekly to change what the is going to look at. So let's just leave that for now. But this is high-level consolidation. And you know the pattern that I always talk about, and I meant to do this some time ago, spoke about it, but I forgot to actually type it in. I've drawn in the rectangle formation. This rectangle formation says that within the context of the, within the context of the larger daily chart, you can take a smaller chart and you can derive from it a Chapman wave buy signal that goes to a buy mode within a smaller time frame. And that smaller time frame says if it's the 120-minute chart, you've already gone to an A to B. There'd be a very negative H formation if Tesla, it doesn't even have to close there. If it goes to 249.50, that's 5 points lower, that'll be very negative because it will make the stochastic turn down. MACD will be deflecting lower. What's needed to fulfill this rectangle formation, I've drawn it as a cup formation. But what is really needed is for Tesla today to start pushing above 257. And that would say pushing above 257 says very good. Now I can head towards leg C above 260 and then maybe even make another D round about 265, the round number high. So I'm watching this because to me the 265 round number high in Tesla is a really good clue to say, remember 265, put it in red, because we will be coming back to talk about it within another 3 to 5 sessions. So that's Tesla, but it is also in the daily chart made a beautiful cup formation breakout in the technique that I call the Chapman wave cup and ladle breakout, which usually takes you to D. Well, it did go to a D, and then it looks like it's recycled to a G/C. So I'm watching it, and the reason why I'm making a little bit of a deal out of this is that Tesla, in essence, isn't really a market player right now. It's in its own orbit. It's doing its own thing. But I'm getting the feeling that Tesla could, in fact, come under pressure very soon when it's perceived that Musk is trying to turn it into a battery company. You have a different clientele of buyers completely to the stock as opposed to the sexiness of the Tesla automobile. So I just wanted to get that out of the way. Certainly the verticality of the weekly chart and monthly chart says a pullback is certainly coming. But hey, it's a sexy stock. And when you get your stock du jour, they can do anything at any time. So if you're applying these things to the downside or the upside, always keep in mind you have to have stops for these because they can move very quickly in points. At 254, it could very easily move 30 points. That's 11 to 12% in a day. So that's the one. I want you to go through Google, Google, which had acted beautifully, and then all of a sudden just stopped dead at 1288.88. The pattern that I was going to do to draw in last night, I just didn't have a chance to do it, is that triangle, that descending triangle, you know, the one I call the falling axe? Well, it has broken out. And this is another reason why I'm talking about possible rotational corrections. For instance, we are short a sector. We're a shorter sector, but pretty darn tight stops. I did increase the stop on one portion of a position for today because there was some weird action pre-market, and I didn't want to get taken out either pre-market or at the open through some crazy 20 shares or 50 shares or 100 shares. So the situation is going sector by sector. I suspect that if you have your favorite stocks that you look at in each sector, perhaps say the top 3 or 5, keep an eye on them because they are going to be really important factors over the next 2 to 3 sessions. Why? Google has all the requisites in the price that says that the Chapman wave falling axe formation, having broken out intraday, that is, if it closes somewhere around here, that's a break of trendline resistance and says there should be a pop to the 1288.88 level over the coming, it has to be quick, 2 sessions. If in fact by the end of the day it closes under it and closes at 1216-ish instead of 12 up above 1221 or so, that says, uh-oh, that resistance failed and the stochastic was negative, the NACD was negative, any price movement to the upside was done in isolation. And those are the ways I'm looking at it. So that means I'm on the cusp with Google. Google breaks out above 1288.88. It can go to a leg E. I could even recycle. I mean, the monthly chart is outstanding and the weekly chart is really strong. I don't normally say that. I hate when someone says, you know, we could go up, but we could go down. I just don't like that. I mean, anybody can say that. I'm saying if certain parameters break, there's a real good chance that we're going to recycle to the upside. And that's something I'm going to be watching really closely. If they break to the downside, that means something else. And that's, to me, at this particular point, that's the most logical thing to do. If you look at Amazon, almost the same thing. It had a beautiful action going into December and then the beginning of January. And then out of the blue, I spoke about this. I said, there's a chance that Amazon is making what I call a hat trick top. Can't believe a great company, but they plow all the earnings back into the company. That's why it's a monster. But at some point, someone's going to say, hey, wait a minute, Amazon, we want to know you're actually making money now. Well, this chart says that if Amazon in the month of March does not close above 386, is at 369 right now. It's not a big deal, less than 20 points for a stock that's trading at 369. If it cannot do that, it's going to say, uh-oh, monthly was very good. It was very correct. So was the weekly at peak E in the monthly, peak E at 408.06 in the weekly, and in the monthly with a doji candle, silent doji candle before that. And the weekly chart, almost the same thing. I'm watching this real closely because it's a nice rally. Today we actually went to a peak C. So the H pattern is turning into a larger M pattern. And that's very positive because if it breaks and it gets into the gap high was 375.45 on the 31st. The day before it closed at 403. So if it gets into that gap, we can watch it closely. That's why I say 386. That's not the, but 386, the low of 83.24 on the 29th. I want it above that. So I'm watching Amazon very closely. I'm also watching, let me just get this right now. FB, Facebook. Facebook has that falling axe and looks like it wants to break out. I'll be back. We'll be looking at Facebook, and I'll get the globe, Boston Globe, because I want to tell you those parameters, and I'll be right back.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. We're back. And here it is on the front page of the Boston Globe today. Dow Jones roars back, 16,395.88. Then it has, inside the graph, it has ... But investors still wary. Gallup polls have asked Americans how they felt about investing in the stock market. Bad idea, 46% in 2007, 62% in 2008, 54% in 2009, and 50% in 2014. It's improving. That is, the bad idea has gone from 62% agree it's a bad idea to 50%. That's half the public. Then there's another graph. It says the polls also asked if they owned any stock. Yes, 65% in 2013. 2007. 62% in 2008. 61% in 2009. 54% in 2014. I have to tell you, by any measure, I've just been in this business too long, that is really bullish. And that explains why the market's going high. Well, 2 things explain. One is, there's really nothing else. Yep, you can do real estate, sure. But the stock market is a lot easier for people. And That's the way it is. All right, Facebook. Facebook's at 71.34 up 256. If it can get to 71.45, it breaks out. I'm not going to call that a new leg A because it had a Chapman wave instant restart. Let me just explain right here. Within 3 bars, it went peak D, pulled back for 1 bar, and then broke out to new highs. So a new recovery high, that is. So that becomes E/A. Then it goes to a perfect peak F because the MACD turned down, the stochastic turned down. The price pulled back, but it really only pulled back from 71.44 to where? 66.51. You would expect from peak F that we would have to follow through, at least if not yesterday, today to the downside. This break to the upside is very positive, and it says that I can call it to be conservative. I could call it new leg C. So that's his C, and maybe we can go to D by next week. But the weekly chart is still very strong and flattening out at 94%. And this is the reason why I'm saying there's the possibility that we could be correct, that there is some kind of a market correction that's about. But the rotation says don't be blind to the fact that there are certain stocks that are doing extremely well right now, while others are just terribly overbought. And the overbought ones are the ones you need to concentrate on sectors in terms of shorting, and the ones that have recycled to new highs, like the Facebook, probably have a little bit more room to them on the upside. So let me just assess real quickly, because it's Wednesday. Larry Pesavento will be coming on. Great program all day. I do want to say I'll be back tomorrow morning, but the parameters to watch for the next 2 days are real clear. Well, not the next 2 days, from today to Friday's close. If the Dow closes, and I'm going to be very clear about this, if it gives back a chunk of the gain and closes under 16,300, it'll say just be really careful. It's very selective, and that we could have a pullback, but you're not going to get any real intensity until the volatility index starts to climb to the high 15s, low 16s. Then you'll start to see persistent selling. That's number one. Number two is a bear phase, even if it's just a short-term bear phase, you have to have bad news. You can start off technically, but then to sustain a move, you need VIX higher, bad news infiltrating the market over and over. Till you get that, I would say a mild pullback. I'm expecting some kind of a mild pullback. Deeper than that, a close by Friday afternoon under 16,300, and I'd say, oh, you got to be somewhat careful. A pump and a push in the next 2 days above 16,005.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.